Stock invested for beginners. Last week from July 8 to July 12, 5 trading days, I made over 3,900. And if you look at July 1st to July 12th, 10 trading days, I made over 8,645. Today I'm going to talk about 7 stocks that's going to report earnings this coming week, and which are the companies that I like the most out of these 7 stocks, and also why did the stock market drop suddenly last Thursday. That's what we are going to talk about today. Let's look at S&P 500. Over the past 5 days, it went up, look at that, until Thursday morning. Then after that, it dropped like crazy. Nasdaq, same way, it went up, then it dropped crazy, except for Dow Jones. Dow Jones, it has been moving up, so something must have happened this area after Thursday morning. So let's look at what happened. Last week, there were a few economic reports. Out of all these reports, Federal Reserve Vice Chair, they spoke. Chairman Powell, he spoke at the Senate. He also spoke at the House as well. So stock market has been quite optimistic. And on Thursday, CPI, Consumer Price Index, reported negative minus 0.1%. That's better than expected of 0.1% decrease, negative. So last week, the week before last week, it was only 0%. So it's better. So that's why stock market went up in the morning. And CPI year over year better than expected. Core CPI also better than expected, 0.1%, which is better than 0.2%. Core CPI year over year better than expected as well. Friday, it really doesn't matter. The stock market dropped on Thursday. Producer index higher than expected, so which is not good. PPI, lower than expected. Core PPI 3.1%. Last week, the week before last week, it was 3.3%. So why did the stock market drop when the CPI came out better than expected? Because the hedge fund managers, institutions, rich people, they have been investing in technology, big cap. Now, Jerome Powell said there is a higher chance of lowering interest rate. So now, cause CPI numbers and CPI number came out really better than expected. So September rate cut is 90% for sure. So what's gonna happen? Lower interest rate is good for small cap company and real estate company, but institution, they need money. They be putting money in a big cap. So they sold big cap technology company. So Nasdaq S&P 500 dropped over 1% within 1 day. But real estate company and healthcare, it went up. You see, healthcare like United Health, the past 5 days, it went up. Look at that. Because institutions, they have been underweight healthcare, Dow Jones companies, and that's why they sold Nvidia, stock like Nvidia, they sold it. Look at that. Over the past 5 days, Nvidia dropped on Thursday, and Microsoft as well. Look at that. The past 5 days, Microsoft also dropped. Look at that. Apple, Amazon, whatever, it dropped. Thursday, big cap technology company, institution, they need the money to sell this stock. Then where do they put their money in? Look at that. Real estate, Toll Brothers. The past 5 days, it went up. Look at that. Real estate company like Nanas stock. It went up. Look at that. It went up. Then DR Horton stock. Look at that. It also went up. DR holder also went up. So all the real estate company went up. The big cap dropped because the interest rate cut in September is 90% for sure. So they need the money to rotate. But don't worry, there are lots of money in the money market fund. They're gonna come up, then they're gonna put it in the big cap, mega cap, so big company. So the drop was only temporary. So nothing to worry. But I think for the next few weeks or few months, the real estate company and small caps gonna perform better because they need lower interest rate is good for them because all these small cap companies, they need to borrow money. Big cap like Apple, Microsoft, Nvidia, Google, Alphabet, they don't need money. Even if the interest rate is so high, they have so much cash, they don't need to borrow money. They even can buy countries. Remember, their cash is bigger than many countries around the world. So they don't need money. But so when interest rate cut happens, it's gonna benefit real estate company and small cap the most. That's why the big cap they drop. Yeah. So let's look at stocks that reported earnings last week. SGH reported earnings. Semiconductor. Personally, I do not like this stock, but did it beat S&P 500? Look at S&P 500 the past 5 years. 86.32%. No, it doesn't beat S&P 500. So I'm not interested. This stock, you see it dropped the past 5 days. Like I said before, I don't like sushi, restaurant business in general. Even though it beat S&P 500, I do not like it because it can be quite volatile. Look at that, up, down, up, down, up, down. I think it's nearby support level right now. 66 probably already broke a support level. 32. Look at that. Here is how much is it? 39. So the next support level is around 39.40. You see? So it's going down. So that's why I don't invest in sushi or restaurant companies. Look at Pepsi. Pepsi is up the past 5 days. 5 years, even though it doesn't beat S&P 500, it's really good for recession. It has a wide economic moat, and its brands is known everywhere. So for recession, I like Pepsi stock. If I predict that recession is gonna come near very soon, I'm just gonna buy Pepsi. It's in a value right now. Of course, this is not financial advice. I'm just telling you what I would do. And look at the next one, JP Morgan. It did not move. This is a great company too. The past 5 years, did it beat S&P 500? No, it did not. And personally, I don't like banking, so even though it's a great company, I'm not gonna invest in JP Morgan because I have so many stocks, companies that beat S&P 500, 86.32%. It beat S&P 500. My companies. Citigroup doesn't move at all. The past 5 years, it doesn't beat S&P 500. So no, I'm not interested. So let's look at what's gonna happen this coming week. This coming week, retail sales is gonna be reported. Import price the index. I don't think it's gonna move the stock market so much, but housing stock, that's gonna be interesting because right now real estate companies are getting attention right now. So if come out better than expected, the real estate company can go up much higher. They are going to be reporting earnings pretty soon as well. So if you are interested, you can look at real estate company. It's not gonna be too late because after 2 or 3 months, when everybody start talking about real estate company or small caps, it may be already be too late. But because you subscribe to my channel, you get to know this knowledge in advance. Small cap real estate companies gonna outperform in the next few weeks or few months. That's my prediction. Jobless claims, very usual. It's not gonna move the stock market so much because Jerome Powell already said that they're gonna cut interest rate. There's a higher chance. And now CPI data came out better than expected. So people, we are very sure that September cut could be coming in September or October, November. So earliest could be September. So let's look at stocks that's gonna report earnings next week. Goldman Sachs, year to date is up 23.5%. So when you are looking at the stock, you only want to choose stocks that beat the S&P 500. Goldman Sachs 124.31% the past 5 years. It beat S&P 500. Yes. So then the next second criteria that you can look at is, has it been in the business for at least 10 years? It was founded in 1869. Yes. The third criteria, has it been a public company for at least 5 years? Yes, it has been a public company for at least 5 years. Next one is, do you like this business? Personally, I don't like banking business. So even though it beat S&P 500, I may not invest in Goldman Sachs. But if you like banking, you can look at their financial statement as a fifth criteria. Look at financial statements, balance sheet. Is it liquid company? Has their revenue going up? How about their net income? Has it been going up? So you can look at everything. Then you can buy it if you want. The next company, United Health, is down 5.16%. It's a great company in my opinion. Why is it down? Because it's an election year, and now we are not in a recession yet. So people are not going to buy healthcare. They are focusing on AI technology, so they are neglecting healthcare. So that's why I like United Health. Did it beat S&P 500? Yes, it beats S&P 500 over the past 5 years. Has it been in business for at least 10 years? Yes, because I know. If you are not sure, you can always look at this. Founded in 1977. Has it been a public company for at least 5 years? Yes. Do I like this business? Healthcare, insurance? Yes, it's inflation proof. If inflation gets worse, all they have to do is just raise their premium. If they raise their premium, people, they have to pay. You know, Americans, they need health insurance. They need to pay. So yeah, I like this company. I like financial statement, balance sheet. Yes, great companies. I like it. Next one, Bank of America. Do I like this business? Bank? No. Does it beat S&P 500? No. So I don't even need to look at that. It's gonna be reported earnings. Morgan Stanley, year to date up 10.85%. 5 years, the past 5 years, does it beat S&P 500? Yes. So you can possibly look at it. Has it been in business for at least 10 years? Yes, it has been in business for at least 10 years, since 1935. Has it been a public company for at least 5 years? Yes, because I only know this company. Do I like this business? No, personally, I don't like banking, so I'm not gonna look at that. If you like it, you can look at their financial statement as the last and the fifth criteria. The next stock, Netflix, year to date is up 38.23%. 5 years, 73.5%. It doesn't beat S&P 500. So I'm not interested. And do I like this business? I'm a little bit towards liking this business. I used to not like this business. But compared to Alphabet and Netflix, I love Alphabet much better. So I do not own Netflix because I only own Alphabet and other better companies in my opinion. But when I'm traveling around the world, all the apartments that I stay, they provide Netflix as a facilities, as amenities. So Netflix is becoming like a wider moat. Everybody's gonna start asking about Netflix. You know, if you are an Airbnb owner or hotel or apartments, you don't have Netflix, you know, people, the tenants, they may not want to stay at your house. So yeah, Netflix is becoming more like necessity. So yeah, you can think about it. If you like this stock, you can look at their financial statement, you can trade. So the next one is American Express. Year to date is up 36.72%. Do I like this business? Does it beat S&P 500? The past 5 years, 86.49% compared to S&P 500 of 86.32%. It just barely beat S&P 500. So if you know how to look at stock like this, you can possibly make profits like this. You know, it's not 100%, but this is how I analyze stocks. So when I analyze stocks, I only buy great companies. So that's why I get consistent. profits. Even when I trade call options, put option, advanced option, I only trade great companies. American Express, I like it. It has been in business for at least 10 years. It has been a public company for at least 5 years. Yes. Do I like this business? Yes. I like credit card. Even though they have banking, I like credit cards, so I can think about it. And the fifth criteria, financial statement, balance sheet, yes, I like it. Yes, this is my type of company. The next one, TSM, Taiwan Semiconductor, 84.53%. So it doesn't beat S&P 500. Well, I'm talking about year to date. It beat S&P 500. The past 5 years, look at that. Yes, it beat S&P 500, 354.4%. Has it been in business for at least 10 years? Yes. How about public company for at least 5 years? Yes. I can tell you yes on the spot because I know this company. If you want to double check, if you are a beginner, a new investor, you can always look at that. Founded in 1987 in Taiwan. Do I like this business? I like their business, but what I don't like is that their locations. This is a Taiwan company. So if in case China and Taiwan get into war, it could seriously impact Taiwan's TSM company. The stock could go down. Right now, they are building new factories in America, in US. So that's why investors are getting more comfortable investing in TSM. The past 5 years, no, they were not comfortable. So that's why the stock did not move for the past 2 years. 2021 until 2023, it did not move at all. And now it moved. So sometimes, if it's great companies, I always like to hold it for at least 3 to 5 years. It may not move for the past 2 years, but the third year it may move. Sometimes stock doesn't move for 4 years, but it's just double on the third year. So in that situation, you might be better off holding that stock for 3 years, 5 years, then rather than trading. What if you have been holding for 2 years and you sell it, and after you sell, it jumped? You don't want to miss that. So out of all these stocks, which are the long-term companies for me? United Health, American Express. Yes, the other stock I may just do trading. Yeah, second tier preference will be TSM or Netflix. Banking, not so much. Banking will be the last tier. If you ask me which banks do I like the most, probably Goldman Sachs and Morgan Stanley, not Bank of America. So if you have any question, if you are just starting out, you can open an account using the link down below, and you may get free stocks as a bonus as well. Good for you, good for me. If you want to check out more videos, every week I do live. You can go to live tab and check out my videos, and you can go to my playlist. If you want to know how to trade options, cryptocurrency, stocks, how to invest, check my how to playlist. Share, subscribe. I will